Listen, folks, we got a lot to talk about tonight. It's a late night for me, and I come home to this nonsense. Apple down 3.5% after reporting earnings. Are you kidding me? Look, I'm a man who's got to own up when he's wrong. I gave you this one as one that I thought was going to pop after earnings. Look, I thought this was going to be it was going to be a beat by him. I really did. But I would presume it isn't based off of this result. I, on the other hand, still am quite happy about this because this means we've got some num-nums, and it's called Apple stock, and I'm going to eat it up under 150 all day, baby. Let's look at these earnings. So GAAP EPS here of $1.24 is in line. Not even a profitability beat, but this is where we get a concern. Not a concern. Look, I think the analysts were just that bad. 83.36 billion, up 29% year over year. It's a miss by $1.6 billion though. Look, in my eyes, a 30% growth year over year, when you're talking about $80 billion, I find that to be a massive growth. Massive. Look, that is, I don't know what you want me to say. That is incredible growth. It's incredible growth. It's just, there's no other way to say it. Despite a miss here, look, analysts were a little aggressive here. This is an incredible quarter of growth, and I like it. Let's look at the products. So products came in at 65 compared to 68.2. iPhone missed. I thought it would be a bigger quarter for iPhone, but analysts were very heavy this quarter expected. 38.87 compared to 41.6 consensus. Mac came in below, 9.18 compared to 9.3. iPad actually beat, which is kind of crazy. iPad's normally a very level segment there, 8.25 to 7.16. Wearables, 8.79 to 9.28. That missing is kind of wild too. And services did beat at least, which is really, in my opinion, I think it's the most important part of the company right now for the future of it. 18.27 versus 17.57. Again, this is a category that really didn't even exist. We're talking about all they had was Apple Music. So let's be clear. I like seeing that number, and I like seeing a beat in the services aspect. Let's look at the press release, see if we can find some great stuff. Which we will. So, most powerful product. Okay, we get it. We already know Tim Cook. We know what you got going on there. We saw. Well, this is cool. Obviously inline cash dividend, nothing crazy. 22 cents. Yields are right around 0.6 right now, so it's not a major yielder. But again, any dividend when you're talking about a great company makes me kind of happy. I like it. So let's look at some of the financials. It's what we like to do, okay? It's what we like to do. Get out of here. Financial data. Let's look at the financial statements here. This is what I'm all about, okay? We're zooming in for you because I care. I care about you. Again, here's where you see the big difference. This is what I like to look at. If you're looking year over year, they grew $15 billion on the product segment, and services grew by $4 billion. It's incredible growth. What else do you want to say? I don't know what else you could say. Net income grew massively. $20.5 billion compared to $12.6 billion. Massive quarterly growth. And when you're looking on a 9 months ending perspective, $94.6 billion compared to $57.4 billion. That is a net income line like no other. We're talking about revenue here. $365 billion, $94 billion of net income. Just beautiful numbers. I like it a lot. And I like it a lot. Growth in every single region. Look at that. Every single region grew. Americas, Europe, Greater China, Japan, and the rest of Asia Pacific grew. They all grew. Each category, guess what? Each category grew as well. Look, iPhone didn't hit estimates, but they put up a $38 billion number compared to a $26 billion last year. Look, analysts are just off. They were just off on this one, I think. Let's look at the balance sheet. I got to do it, then we'll talk about the stock. Look, total current assets did fall a little bit here in the last year. 134 billion to 143, where it's at, or where it was at before. So it fell by, right around $9 billion, which not crazy. I'm gonna assume they paid off some debt. Maybe I'm wrong. Let's hope I'm not. Total assets in general 351, compared to 323. So again, maybe I was wrong, and they're actually looks like they grew this marketable securities number by quite a bit in the last year. So assets grew by quite a bit here. I like to see it quite a bit. I like to see a lot of it. $28 billion. So total current liabilities did rise, 125 compared to 105. So a $20 billion rise there. And liabilities grew by quite a bit as well. Kind of crazy to see long-term debt increase by a decent margin. 287.9 compared to 258.5. Shareholder equity did fall in the last year, 63 billion compared to 65.3. I'd like to see a little bit. I mean, again, this is not a concern in my opinion. Apple's a fantastic company. I mean, it's a fantastic company, and you can see it in every aspect of the business. Look, this is a company trading at a very steep market cap, $2.5 trillion. But I think it's one that warrants it. We're talking about a company annually going to bring in close, right around $380 billion. So, all things considered, when you're talking about valuation, actually, it's not incredibly expensive. We're talking right around 7 times the value there. This is not incredibly expensive for a company still growing at 30+% clips. 30+% clips. It's incredible growth. And they pay a dividend and a P ratio now, after today, going to be sitting closer, really right under 29. I think this is a cheap stock under 150, and I think it'll be a lot higher in value when you're talking about 5 to 10 years down the road. So I like it. I'm buying Apple stock at this point. Let's see where it opens at tomorrow, but I hope you have a great day.